Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to Accountants Minute. Accountants, innovation companies present a great opportunity to you. The Federal Parliament last week passed the legislation for crowdfunding companies and early stage innovation companies. This gives you a tremendous opportunity to introduce a new range of professional services to help thousands of potential new business operators. Because the federal government has indicated that at least 4,500 companies tried to raise capital in 2015 and couldn't do so. And obviously the government expects those entrepreneurs to be very keen to try to utilise the crowdfunding companies and the early stage innovation companies to assist them in their capital raising efforts. So what's involved? For crowdfunding companies, the company has to be a public company. It's a bit different to other countries around the world that have introduced crowdfunding equity raising, but in Australia those entities have to be a public company. Assets cannot exceed $5 million. Turnover cannot exceed $5 million per annum. The amount of capital that can be raised is up to $5 million every 12 months. That's giving these companies a tremendous opportunity to raise capital. There is a limit though for retail investors. Retail investors of everyday people can invest up to $10,000 per annum per company. The sophisticated investors, there's no limit, and a sophisticated investor is a person who has $2.5 million worth of assets or an annual income in excess of $250,000. And each of these crowdfunding companies needs to appoint an intermediary who is an organisation which holds an Australian financial services licence, and they will act as the gatekeeper. The early stage innovation companies are significantly different. Those companies must have been formed in the last 3 years, have expenditure of under $1 million, have income of under $200,000, and they must pass a 100-point test to be eligible for the classification early stage innovation company. And why are they so interested in passing the test? Because investors can obtain a 20% tax rebate on the value of their investment. Each year they make an investment in a company up to a maximum rebate of $200,000 per annum. And they are also entitled to a capital gains tax exemption if they hold the shares for more than 12 months and under 10 years. So there's tremendous opportunities for accountants to get in on the ground floor of this new emerging activity for young companies in Australia. We're conducting a special webinar on Tuesday the 17th of May at 2 p.m. and I'd invite you to go to our website www.essbiztools.com.au to register for that webinar. If you have any questions on any aspect of the two new corporate entities for the government's innovation strategy, please don't hesitate to contact me, peter@essbiztools.com.au. Have a wonderful day. Goodbye.